In this episode of Smart Humans, we talk with Noel Moldvai and discuss the world of pre-IPO. He's the CEO and founder of Augment, the marketplace that allows you to trade pre-IPO stock. We discuss what verticals are interesting, like defense, AI, and what is less interesting. What's going to happen in the economy? Which companies should you be investing in? You probably all know about SpaceX, but what are the other companies that could be interesting to get into today?
Welcome to Smart Humans with Slava Rubin, presented by Vincent. In this alt investing podcast, Slava talks to amazing minds about their investment journey and finds out what it takes to make it in the markets. And now, here's your host and smart human, Slava Rubin.
Hello, and welcome to the latest episode of Smart Humans. I am super excited for today's guest. We have Noel Moldvai, who's the CEO and co-founder of Augment. I'm particularly excited because he's an expert in all things pre-IPO companies and IPOs. And that's what everybody's already talking about right now with the start of the year in 2026. So Noel, welcome to the show.
Thanks for having me, Slava.
Absolutely. So let's get started where we always get started, which is how did you even get into this world? Take us back as far as you'd like. Childhood, birth, high school, college, first jobs. Where does this all come from?
Oh man! All right, I'll start at birth. Was born in the former Yugoslavia. When I was 4 or 5, war started to happen over there. We moved over to Canada. Toronto area, was there for about 6 years, and right before the .com bust, my dad got a job in the Bay, in Silicon Valley in California. So we moved over there, and I was in the Bay for about 20 years. East Bay, went to school there, lived in San Francisco, worked in the peninsula in Silicon Valley. And then COVID times, just like a lot of people, made the move over to Austin. And we've been here for, about 4-ish years and loving it.
How did you start thinking that? Is it a tech angle that you were interested in, or was it the pre-IPO companies that you were interested in? How did that happen?
Yeah. So this is around 2018. So I'm a product guy. I'm not a finance guy. I've really only been in the financial services space since we really started Augment out of necessity. And I was at a company called Rubrik. I was one of the first employees there. This is back in late 2014, early 2015. I was there for about 6 years, and I started hearing about people being able to get liquidity for their shares, because Rubrik at the time was a super high growth company. Not compared to some of these AI companies today. Anthropic started 2021. 4 years later, it's a $350 billion company. It's not that type of trajectory, but high nonetheless. And started seeing messages in my LinkedIn from these pre-IPO brokers that were like, hey, do you want to sell some Rubrik shares? And I never really gave it much thought. Then I left Rubrik in 2020. I wanted to do another startup in data security, which is kind of forking off from my Rubrik journey. And at the same time that I left my job, I moved in with my girlfriend, then wife, in a pretty nice place in San Francisco. And COVID hit. And, the people that I was going to start this company with were a little bit older. They didn't want to take the risk. So I was just like hanging out here with a bunch of expenses and no job. And I was like, okay, well, I don't want to go back to a corporate job. How about I go and just build a bunch of stuff that I didn't have time to before? And was doing that for a little bit. And then was like, well, I also want to buy a house. I want to get an engagement ring. I want to get married. All those things cost money. I started Rubrik in my early 20s, startup. So I was getting paid below, what I would get paid at a big company like Google, which I was at before. And realized that 95% of my net worth was in this supposedly illiquid Rubrik stock. And was trying to do a secondary transaction. I was like really optimizing for price. So didn't have a full-time job at the time. I was probably spending 20 hours a week on this. And eventually I got a deal done. I probably talked to 40 different people during that time, constantly emailing back and forth. And, we ended up paying one of these independent brokers that were not on one of the big platforms at the time, like SharesPost or Forge or EquityZen, a bunch of money. And I thought there was a better way to do things, because at the end of the day, really all these brokers were doing were selling their networks. And I think technology would lend itself well to solving that problem. Where we are today is very different than what we initially set out to solve. But that was really the story. And so this was circa 2020, 2021, and ended up meeting my co-founder, Adam, who's one of the first real brokers in this space on the capital market side, and doing pre-IPO trading of Facebook, like back in like 2011, 2012. And we vibed. I ended up talking to a bunch of people in the space. He was like one of the crazy ones that was willing to give up all this like short-term cash that you could get from being a connector in that space. And a lot of things happened between 2020, when we like really started to have this idea, in 2022, which is when we started the company. But started the company to try to make secondary markets better.
I love it. So as part of your net worth, you had so much tied in this quote unquote illiquid Rubrik stock. And fast forward to today, you have your net worth, whatever that is. We always love to hear how these smart people, leading these companies, think about their own net worth. So the traditional allocation is 60% into public stocks, 40% into bonds, 0% into alternative investments. High level, what do you think your mix is between stocks, bonds, and anything alternatives? What's your 100% mix?
Well, I would say, that I had that.
Don't count your own personal shares right now in your own company as part of that, because that's an unfair.
I won't. Okay, so alts that aren't Augment. Well, I think I mentioned before, like 95% of my net worth was in this Rubrik stock. Rubrik's appreciated quite a bit since then. And I've also trimmed my position a bunch, but I'm probably say 60% Rubrik still. In terms of public equities, if you include the Rubrik, it's probably around 70%. Alts, I'm probably 10-15% in alts. And that includes, yeah.
So Rubrik is public now or still private?
Rubrik is public now. Yeah, they IPO'd 2024.
Great. So that's great for everybody to know. So that means you're now public position, including how much is all of your net worth with all of public equities, including Rubrik?
All public. What percentage of it? It's
of 70%. The 100%. 70%.
70%. Yep.
And then bonds, anything?
Probably about 10%.
And does that mean the rest is 20% alternatives?
Yeah, somewhere around there.
Around? So of that 20% alternatives, let's zoom that out to be 100%. That's 100% alternatives. What's your mix of 100% alternatives? What is that? How much of that is pre-IPO stock? How much of that is crypto? How much of that is baseball cards? How much of that is whatever you like to do?
There's probably
high level percentages.
There's probably a lot of things lumped in there, and some could be considered investments, some couldn't be. I would say I'm probably about 10-15% crypto. A very large proportion of that are investments I've made on Augment, actually, the last couple of years. So I'm definitely dog fooding my own product. And
when you say crypto, you mean into crypto companies, or you mean crypto token?
Yeah, this is mostly Bitcoin and ETH.
Okay.
And a little bit of Doge.
Nice, of course, perfect.
So a lot of stuff in Augment. I have also invested directly into startups, mostly things that my friends have started, and also an LP in a few different funds.
Got it. So you're like, of that 100% of alternatives, you're like 15% crypto and a whole lot of pre-IPO, whether it's straight into the companies through some secondaries or into an LP position.
Yep, exactly.
So no like real estate or private credit, yield oriented. You're like high risk guy, huh?
Yeah, I've after I cashed out a little bit of Rubrik in 2021, I also put some amount of cash into art in Masterworks.
Oh, okay.
I'm the type of investor that I invest and I don't really look. I'll look at my portfolio as a whole, like on something like a Monarch, an all-in-one finance app, in case anything really changes. But I tend to invest and not look. And so even my publics, that's like, it's Rubrik, and then the rest of it is probably all QQ.
All right. Well, you have a little bit of hedging there, so that's good. I like the buy and hold strategy. I'm a big fan. Everybody has their own perspective. It's amazing how every one of our guests is so unique with how they think about their positions. Well, let's move on to the economy, which is, you have a really interesting perspective because you're talking about all these pre-IPOs, are they going to IPO, what's happening in the market, all this. I want to give you a very open-ended question. You can take it wherever you want. What's Noel's perspective on where we're at with the market and the economy? Take it wherever you'd like.
I think I'm not an investor type. Pretty much what I focus on is the things that are important to me, which is Augment. And so I'm focused on building out the company. I take the kind of middle default view that I think everything over the long term appreciates. And so that's where I'll allocate my cash. Like, I don't think too deeply about those things. I do think that AI is different than all the other upswings that we've had in the past. And so you'll see in my personal portfolio, especially in the privates where there's a lot of upside to be had, I invest pretty heavily there. So I think AI is going to change a lot of things. I think there's some big bets being made in quantum, which would be pretty crazy. I think energy is going to be a big sector as well, with nuclear and the things that are going to be required to power all this AI. But I think, economy wise, I think, interest rates are probably going to end up dropping. I think we're going to be going bull for the next, call it 12 months. After that, I think it'll still be up and to the right, but very slow. So I'm buying and holding.
So you're pretty bullish on 26.
I'm pretty bullish on 26.
Beyond just like the areas that you work in, which is this pre-IPO market, you think the economy and the market, meaning the stock market overall, you're generically bullish. Is that right?
Generically bullish.
Nice. So let's try to pin that down a little bit. So you mentioned this already. You said the rates would come down. So we like to do this lightning round type approach. So rates a year from today, up, down, flat, and you already said down by how much, your prediction?
I think there'll probably be one or two more drops.
So is that 25 or 50 basis points?
50 basis points probably.
Cool. And then inflation, you think up, down, flat a year from
Flat.
now? And
Are
then
you are you gonna bring me on a year from now and be like, you were wrong on all this stuff?
I'm happy to do that if you'd like to return.
I'll only come back if I was right.
That sounds perfectly fair. The listeners like to hear people like yours opinions. So inflation, you think is going to be flat. And then what do you think about unemployment? Especially with AI, there's a lot of narrative there.
Yeah, I mean, on the AI thing, I think it's, there's the fear aspect of people's jobs being replaced. So the short term, I think maybe unemployment's going to go up. I mean, we don't really hire junior engineers anymore.
Because
AI
because of
AI is,
Claude or
yeah, all of the coding tools that are there. I think a senior engineer can do that themselves. And within our own team, we have this two pizza rule, where if your team that's working on something specific is larger than the amount of people required to eat two pizzas, it's too big. So we got to split it up. And I think AI will keep those teams small while increasing productivity. So I think there's truth to that if you're in the short term, but I think long term, people are going to find other things to do.
I love the two pizza rule. I've heard that in many different versions. I think Tony Hsieh, when he was building Zappos, always said that you should have teams, in two pizza sizes as well. Otherwise, it's too big of an effort. So unemployment, you think a year from now is up? I'm not trying to
Slightly.
be the witness there. I'm just seeing where
Sure. Yeah, let's say up.
which is interesting. Unemployment is up. So rates are down, inflation's flat, unemployment's up. And where is the stock market a year from now? Up, down, and flat?
I think we're going to be up a little bit.
What's up a little bit? Try to give me like 0 to 5, 5 to 10, 15, or is it, because for 2 years in a row, we had over 20%. And then last
Yeah.
year, we hit another 16%. For the 3 years in a row, it's kind of nuts. So I know you're saying it's a bullish 26. So what do you think that could look like for the overall stock market?
I'll go 8 to 12.
Nice. So kind of consistent or a little bit more than that. Great.
Yeah.
Traditional like 10% for the last 20 years, basically.
Yep.
Um, awesome. So you created Augment. You gave us a little bit of that color before, but for anybody who doesn't know exactly what Augment does, can you just give us the basics? You know, how old is Augment? How big is it? Can you give us a sense of, what it's doing?
Yeah. So Augment is the Robinhood for the private markets. I'll separate this into what the vision is and where we are today. But the vision really here is that private markets and pre-IPO typically have been very difficult to access. And so we're trying to solve three things. We're trying to solve the transparency issues, like what are you buying and what price are you buying these things at, and compared to other options. Access, it's like how do you actually access these things? And then liquidity. Typically, when you're buying, private companies, you're buying and you're holding until there's a liquidity event, which increasingly, is longer and longer. 10, 12. SpaceX has been private for 20, 25 years now. And so those are the three main things that we're trying to solve. Augment has underwent an evolution, I would say, since we first started the company. Started the company in 2022 to really solve my problem of
Rubrik.
How do I sell some of these shares? And when we first started the company, it took us 18 months to get our broker dealer license. We were an alternative trading. We are an alternative trading system registered with the SEC as well, and are soon to be a registered investment advisor. But when we first started the company, we essentially wanted to be a connector of people buying and selling, and then automating that execution of the transaction. And so that was behaving more as I would say, an intermediary that's connecting two parties and helping them through with the transaction. But when you're doing that in pre-IPO, the fundamental problem is that the time it takes to execute the transactions is 30 to 60 days because you have to go through the company. And the company typically has a right of first refusal. And so the vision of being the Robinhood for private markets, I think, is not, hey, I'm going to hit this button and I'm going to wait 2 months and then maybe I'll get these shares or not. What we want to do is be able to have an app, very simple, deposit cash in your account. Instead of seeing public companies, you see private companies. Few clicks, you own the shares, and then once you have some gains or you have some liquidity needs, you can click and sell as well. And so our main focus here is how does the buyer get into these private companies and actually be able to execute on some of those transactions.
Great. And then do you have like North Star numbers that you guys talk about in terms of customers or transactions or dollars through or anything that you like to discuss?
Yeah. And this number is probably particular to our model, so I'll explain, but we just crossed $750 million in AUM. We are not an active fund manager, which that would imply, but that just means that in our vehicles, we have $750 million worth of assets. So our strategy and the way that we do things is kind of two-pronged. One is we identify securities externally to us. These are shares in the hottest private companies and companies that people have demand for. We purchase those securities and bring them into our ecosystem, which is called the collective. And then we enable those shares within the ecosystem to trade freely. And so that ecosystem inside the collective, exactly. And so that's how you really get around,
having to wait 3 to 6 months or
Exactly.
1 to 2 months.
Exactly.
And that's how you get around the ROFR. Amazing. So on behalf of the listeners, I'm the client here. So I'm going to ask some really basic, simple questions. So let's say I want some stock. I'm going to pick Anduril. Is that okay? Or is that not a good one? We're going to avoid Anduril. Let's just make it SpaceX to make it more straightforward.
Sure.
So I want some SpaceX. Everybody wants some SpaceX. It's the hot company. So can I get SpaceX on Augment?
You can.
Okay, great. So do I have to be an accredited investor?
You do.
Okay, so I have to be an accredited investor. And what's the minimum?
So minimums range depending on the offering, but
I want some SpaceX.
Sometimes under $5,000.
Okay, so should we call it $5,000 just to be consistent, or is it $1,000?
Call it $5,000.
Yeah, $5,000 minimum. Great, but that's a good entry point. So I can take $5,000, I can get into SpaceX, and I think it's trading at trading is not the right word. It was last valued at $800 billion. Do you have any sense, without trying to put you on the spot here, but am I able to get it at $800 billion, or is it going to be like $1 trillion?
You can get it around 850. I'll say that.
Okay, around 850. And then are there other fees that I pay to you, or who am I paying? Like, if I want to
Yep.
put in $5,000
Yep.
right now on this call, on this conversation
Yep.
into SpaceX,
Hmm.
how much money do I actually need to give up to get that $5,000 of SpaceX?
So our average transaction fee is 5%.
Okay.
Our model is a little bit unique in that if you wanted to get access to these companies through a different means, a different platform, or your friend that has access that set up an SPV or a syndicate, they'll typically charge you a management fee, either upfront or yearly, and they'll charge you carried interest. Typically in the space, call it like 10 to 20%. And our model is a little bit different. Our model is we do not charge management fees, and we typically do not charge carry. And so the only fee that you're paying is the upfront fee to get access, which even at 5% is typically lower than an upfront.
That's amazing. I
Management
just
fee.
want to make sure that's heard and understood. So if I'm getting this 5K of SpaceX, I don't have to pay a management fee and I don't have to pay a carry on top of that.
Correct. Yep.
And the price is quote unquote only 850 versus the 800 because a lot of people are marking up to 880 or higher.
Yeah. Yeah. The even if you're buying in at a higher price in a 0-0 vehicle.
Zero zero meaning zero management fees, zero carry.
Exactly. Even if you're buying in at a higher price, I mean, venture is typically like this is either going to work and it's going to explode, or it's not going to work. And if you believe, if you believe and you're bought into that, then typically a 0-0 at the long term, if you're up 2x, you're going to pay a lot less money when you exit when you're in a 0-0 versus a 220, even at a lower price.
Right, because paying that upfront 5% is way lower than how much you're going to lose later when you 5x or 10x your investment, right? Because that 2 and 20 or that 1 and 20 or with 1 and whatever is really going to eat into it.
Exactly. And if you're looking for 20, 30% gain, maybe a 2 and 20 is better for you.
Okay, so I can put in 5K. I need to be accredited. There's typically no management fee, typically no carry, which is pretty amazing. What else do I need to know as a customer? I want some SpaceX, in the next. When can I get it? Like, is it official? It's gonna be mine because is it in your collective, so it's automatically mine? Is that I don't have to worry that I'm actually gonna get it?
There's two ways that you can invest, maybe actually three. The first way is that we're under contract with the seller, and therefore there is some execution risk. But by the time we've listed it on the platform, we're pretty far along in that process. And so in that case, we have had instances where we've had to return money to investors. Most of the time, we will actually warehouse the shares. So the shares are already within the vehicle, and as soon as we receive your cash, the transaction closes. So if you're buying into a warehouse vehicle and you send us the cash for your investment, you can close same day within 10 minutes. And
That's awesome.
I think it's something that hasn't really been done at scale in the market before. And the third way is if someone wants to get out of their position from one of our vehicles, you can buy directly from them. And I think you're going to see some product announcements for us in the next couple of months where this becomes very, very easy to do. Easy enough that you could put it on an app. Wink, wink.
Nice. For anybody who's listening only, he actually winked. Uh, so amazing. I love that. Me as the customer right now, is there anything else I need to know or to consider as part of doing the SpaceX transaction?
I think maybe two more things. One is typically people in this market that are investing, once you buy, you have to hold until there's some liquidity event. And with us, we're actually productizing that liquidity. So, there are some regulatory waiting periods between the time that you buy and when you can sell, but you can actually directly sell on our platform as well with the same ease that you buy.
Because one of the complications, right, just for the listener, is typically every time there's a transaction, you have to go through the company, meaning the actual original company, let's call it SpaceX, to
Yep.
go through that right of first refusal. And really what you guys are doing, I believe, with the collective or with this smart approach is you're actually removing that step by keeping it inside your own, for simplicity's sake, structure,
Yep.
right? So as soon as it's in your structure, you could all share with each other without having to go ask dad whether or not you're allowed to share. SpaceX is dad in this metaphor, right?
Exactly. Exactly. Probably two other things that you want to consider. The first one is price. What price are you actually getting in at? We've partnered with a company called Caplight, which aggregates all of the orders in the ecosystem, executed trades, and comes up with a pretty nice pricing model for where they estimate a lot of these private shares will clear. So consider, what price you're actually getting in at. If you're talking about SpaceX, you're talking about Anduril, there's some like SPVs and other investments out there that are putting on crazy, crazy fees. But what's surprising that people pay those because they want access to those companies, and they think that there is a ton of upside, even at a 800 billion or $1 trillion valuation. But if you have the option of getting into something cheaper, why not? And so we try to be cognizant of that when we're putting offerings up on the platform. The second piece here is, what is the structure of what you're buying? And there's a couple of different ways that you can view this. If you're buying shares in your friend's company and you're directly on the cap table, there's really a lot of risk that if there were an exit, that you're not going to get your cash back. Granted, if the share class and the liquidity stack is above board. But if you're buying into an SPV, you have to be really reliant on who the manager is. And so there's a big element of trust here. We've done a lot of these transactions. We have almost 1,000 trades just in the last, and we've launched this thing 18 months ago, since our pivot. And so there's a heavy amount of trust that you have to put into the fund manager. Recently, there's been this proliferation of stacked SPVs, which factors into both of those two things I mentioned, price and trust.
Absolutely.
So this is like an SPV buying into an SPV that sits on the cap table.
Massively scary.
Very scary.
Nevertheless, so expensive.
Very expensive. So two things there, right? It's like you're stacking fees. So even if you have a 1 in 10 in each SPV, you're going to end up paying that on top of everything else. And so they stack together. So you're going to end up paying a 3 in 30. But the bigger piece here, in my opinion, is the trust aspect. Your fund manager at the third layer will probably know who the second layer fund manager is, but it's not necessary that they know who the first layer fund manager is or whether they have the shares. And
this might all be dependent on some forward, and God bless, we're in trouble.
Yeah. It's like, do they actually own the shares, or is it a forward contract with the underlying seller? There's a lot of questions there and a lot of diligence that you have to do. And so when we buy shares off of fund managers, we look for being in the market for a real long time, being reputable, and regulatory is also pretty important. If they're RIA, that's great because they get audited every year. And so that's why we're taking the step to do that as well. Great.
Let's talk companies and industries, just because, again, everybody's talking about 2026 is going to be an exciting year for IPOs. There's definitely some obvious names. There's SpaceX, Anthropic, OpenAI. Without continuing to lead the witness, what are the industries first that you think are very exciting for 26? And more interesting equally as interesting, is what are the industries you would avoid?
Interesting. Well, why don't you think OpenAI is not going to IPO in 26, by the way?
Oh, I think they have too much governance issues, and I think their governance issues are going to be too challenging for it to be a very clean IPO. So I think they're going to have to navigate that both on their own and with Elon because of,
Yep.
I think Elon really has his thumb over them when it comes to a lawsuit potentially. Yeah. It's very hard to go public with a lawsuit. So I think that is just going to be a mess. I do think Anthropic will go IPO because I think Anthropic is just so focused and clean and easy on so many levels. So that's why I think Anthropic will IPO this year, but OpenAI will not. I don't think Stripe will IPO this year either, even though they're a great candidate, but that's my opinion.
Interesting.
Then again, I'm supposed to be the question asker, not the answerer, but you can ask whatever questions you like.
Okay. Well, I think AI clearly is the most in demand industry right now on Augment. We publish a list of 20 companies every quarter. We actually just came out with our report for Q4 of 25 today. And so we call it the Power 20. It's the top 20 companies that are in demand, have traded, biggest valuations. So in that, you have all the big, foundational LLMs. So this is Anthropic, this is OpenAI, XAI, and you have a lot of vertical AI companies as well. This is like Cursor, Perplexity. So AI really, really dominates today. And then the other big theme is defense. So this is like Anduril, it's Shield. And so I think those are the two big industries that are dominating right now.
What are the two industries you would avoid for this year?
Ooh, that's tough. I would say something to be cognizant of is the really big bets and like the lottery tickets. So I think the lottery tickets is probably quantum. I'm very bullish on quantum in the long term, but they've been saying that, quantum's only 10, 20 years away for the last many years. So who knows what's going to happen there? That's the only one that comes to mind. I think a lot of the other big companies have real chances of doing well.
So, what will be the three companies you're super excited about? Not, this isn't investment advice. This isn't your own pick that we're going to talk about later, but rather just from your lens of seeing all the information and deal flow. What are the three companies that you're most excited about? Is it the obvious SpaceX, Anthropic, like Anduril, or is there nothing else to talk about there, or should we just say that?
I think the foundational model LLMs are interesting. They're all interesting. I think Anthropic's interesting. An area that I actually had this idea back in like 2017, prediction markets. I think prediction markets is going to be super interesting. There's a lot of conversation happening right now on like, is insider trading actually good? Because it actually gets you to the truth,
Right.
albeit, who profits off of that. So I think Kalshi and Polymarket have made a lot of big moves in the last year, 2 years. So I'm pretty excited about those two.
Do you think they're doubling up this year?
I think so.
We're both going from like, let's call it 10, 11 to over 20.
Yeah, they're both around 12 right now. I think they're going to go to over 20 for sure.
Super
personal opinion.
No, of course. This is why people listen. They want to hear some opinions. This is just conversation.
I mean, they could be bigger than the stock market, right? The
Well,
stock market has something underlying it, but here you can make directional bets on things very specifically without having to go through, a bunch of different trades to get to an estimated outcome.
To be cynical for a second, or they could just be a little bit bigger than the sports betting market, which isn't so big. It's big.
Yeah, and that's really what's driving them today. So I think that's the big risk.
Right. And that's very competitive, not exactly high margin, but I can see it both ways. I think prediction markets are very interesting. What's an overlooked area? Because I wouldn't call prediction markets overlooked. I think it's nice that you're bringing it up, and it's cool to hear your perspective on it. What would be an overlooked company or market that you'd be like, oh, I think people are missing this?
I like to invest in things that I use. And I think Rippling and like HR software in general actually is probably going to be something pretty big. They're coming out with a lot of interesting stuff. We're moving a lot of things over to Rippling that traditionally we would have outsourced. So that's just what I'm seeing from the inside. I think that is a super boring industry, HR software.
Yeah. So that's Rippling and Deal, right?
That's Rippling and Deal, yeah. And even like, 401k administrators, human interest is what we use. I think the products can get super complicated, but it's like a Salesforce. Eventually you have lock-in and it's really difficult to leave those platforms once you're in them.
Awesome. Super interesting. What is it that you have the CEO spot? You have over 1,000 transactions, over $750 million of AUM that's gone through. What is it that you see that you can share with us that most people who don't have all that information don't see about where we're headed for 2026?
I think people in the private markets are adopting a much more active trading behavioral pattern rather than a buy and hold. I mean, it's why we've moved up, our roadmap to tackle some of the things that we've talked about. Traditionally, the private markets trade a lot less than the public markets. And maybe that's a feature, I think you can argue, not a bug. But in the private markets, if you have a $5 trillion market cap, call it, $50 trillion market cap, I call it about $200 trillion trades. So you have a 4x turnover. In the private markets, it's quite the opposite. So you have a $5 trillion market cap-ish, maybe a little bit more since all of these big up rounds that have happened, but only about 1 or 2 percentage points of that trades every year. So this is about $150 billion. What we've seen empirically within the Augment platform is something that's 10x that trades. And so what we think is that people actually do want to trade these things. They just don't have the infrastructure to do it. And so we're trying to build that infrastructure. You could get to a point where 50, 100% of these things turn over within our vehicles. And I think that's interesting. And another piece here is that the institutions are actually buying and selling as well. And it's not just these retail traders that are,
What's the typical duration on that? Is that a day, a week, a month, a quarter, a year?
It's typically a little bit under a year, I would say. And there have been some instances in some of our offerings where it's been 100% traded throughout the year, and over 100% even maybe. So, and that's institutions. We haven't really productized this for retail. So you imagine if retail comes in, I think that number is going to go up.
That's an incredible insight. I didn't see that answer coming. That's exactly the sort of thing I was looking for. But just to repeat for people, the public markets is approximately $50 trillion of value, traded about 4x, so 200 trillion for the year. But the private markets is 5 trillion of value and only traded about $150 billion. So there's just so much room for growth there, right? Because even if you get to, as you said, 50%, not even 4x, right?
Yep.
1/2, you can get up to 2.5 trillion, which is way more than it is today, which is fascinating. That's really interesting insight. So you're obviously a smart guy. We all want to be like you. What is it that you're listening to, reading, watching? What makes Noel? What is making you calm? What is making you smart? What is making you informed? What's the content that you're digesting?
Well, what makes me calm is I try to do ice baths regularly.
Nice.
That really chills me out. I went on a adventure with Wim Hof, who is the original Iceman in Poland. This was right when COVID started, so like March of 2020.
Amazing.
So that keeps me calm. I think the company keeps me chaotic, and my kids keep me chaotic. But in terms of information diet, I try to stay up with what's going on in our market. So this is like Sacro, which is great partners of ours. I read a lot of them. Kind of the traditional outlets, TechCrunch, Wall Street Journal, The Information, Money Stuff by Matt Levine at Bloomberg. I started reading that probably just about a month ago.
I mean, he's great.
Yeah, funny guy. And if you are like very, very quick insights on culture every day, I read Pirate Wires, which is hilarious.
Nice.
And I try to listen to some podcasts every once in a while. Is like Joe Rogan is probably the big one.
Perfect. And then our final question, we always put everybody on the spot. We call it 3 years out. What's one public markets pick and what's one non-public markets pick that we do get to keep receipts, and 3 years out we get to say, see, that guy was right or that guy was wrong. So what's tell us your pick and why, what's your public markets pick first?
Public markets pick.
And this is obviously, not investment advice. This is all for entertainment and just for the sake of having a good discussion.
Yes. All about AI picks and shovels, I think. So if I had to choose one, probably NVIDIA.
Okay. NVIDIA at approximately $5 trillion.
I guess 5 trillion.
I mean, let's call it between 4 and 5, right? Because it's hovering. And 3 years out, it's going to be what?
10? First $10 trillion company?
And why is that? Why are you doing that?
I think, and again, this is probably not something that I would do, but if I had to choose one company, I think I'd probably overweight in a QQQ, but I think I think AI is going to take over the world. And I think 3 years is probably about the right time that we're going to see a lot of change, a lot of these companies, and they're going to figure out ways to use AI, and they need something to power it. And NVIDIA seems to be making a lot of deals recently. So there's going to be a lot of capital flowing in there. The other one, maybe a little bit selfishly, my wife works at Google, so probably Alphabet.
I mean, they've been on a run.
Gemini is so good, way better than everything else, at least right now. But that'll probably change in 2 weeks.
And they have so much distribution, right?
Just a lot of distribution.
So many touches of the customer. I mean, they've had a crazy 2025. They were left for dead for a second with OpenAI taking over the world, but that might not happen. So
yeah,
it's interesting where it's all headed.
Well, the thing about, I think, Google and Gemini is, there are some private companies that try to take them on the search realm, is like Perplexity. And, Perplexity is doing a lot of other interesting things now with vertical, really focusing on certain verticals like finance and sports. But the question is, like, can Gemini just kill that? I think that was the big fear.
And then how about in the world that you know so well, which is private markets? What's one company, or you could avoid your vertical completely and give me some other idea. But what would be one non-public markets pick? It could be across pre-IPO, crypto, real estate, private credit, art, whatever you want.
I think I love Elon Musk. And so something in his realm, I didn't say Tesla for the public markets, but I think XAI is going to be interesting. I think they're going to be a real competitor. And all this stuff kind of I think of as one. You have like Tesla, you have SpaceX, which is really Starlink, and then you have the big AI bets. I think all of those are gonna work together and be greater than the sum of the parts. And so I would say XAI.
Okay, so you're long the Elon empire, but you specifically enter through XAI. Is that right?
I think so.
Okay, super interesting. Well, no, we just covered a ton of content from, let's see here. You started in Yugoslavia. I'm actually from Belarus, so I appreciate that. And right away, I became a product guy with Rubrik, made too much money on illiquid stock and had to figure out what to do with it, and then was able to turn that into Augment today. You share with us your net worth, the way you share in terms of really a lot into the public markets, but only because of Rubrik, and then some into the bonds, but you're about 20% alts. Alts is a bunch of crypto, but mostly into those private companies, whether it's direct or into LPs, and a little bit of art through Masterworks. You mentioned there are some interesting things happening, whether it's quantum, energy, nuclear, where we're all headed. And you gave us lots of fun predictions about 2026, rates coming down, maybe 50 basis points, inflation staying flat, unemployment going up, and the stock market plus minus, let's call it 10%, plus minus 2%. I love your two pizzas idea. Everybody should take a listen on that and really focus on how to execute. You really built Augment to become the Robin Hood for privates, which is awesome. And you're already at $750 million of AUM and more. You talked about how I could get into SpaceX. It's a 5K minimum. You should be accredited, but such low fees, a really great entry point, meaning just a one-time 5%, no fees or carry, which is huge. You have the structure, which is the collective, how you were able to go around the ROFRs or keep that away from us and be able to transact sooner. We talked about what was hot, which was obviously AI. You were concerned a little bit about quantum. You gave us lots of good companies to look at, whether it's Anthropic, XAI, Anduril, Shield, Cursor, Perplexity, etc. And then really that interesting thing about the trading volume, about how much there's so much opportunity in privates to get more trading volume of only 5 trillion that there exists, but 150 billion is traded, which is way different in the public market. So huge opportunity still to be had in this market. You gave us a couple secret picks, which was Rippling or Deal in the HR, also prediction markets, might double. None of this is investment advice. You gave us lots of good information on the information diet. And of course, we pinned you down on NVIDIA and Elon Empire XAI. We covered a lot. Thanks, Noel.
Wow, what a summary. Thanks, Slava. Pleasure to be here.
Smart Humans with Slava Rubin is a podcast brought to you by the team at Vincent. Any data, text, or other content in this podcast is provided as general market information and not as investment advice. Past performance is not necessarily an indicator of future results. For more information on alternative investing, check out Vincent at www.withvincent.com.